Let's bring in Stuart Keiser, Citi's head of equity trading strategy, for his take on all of this. Stu, great to have you with us. Great to see you in person. What do you make of this pick? Does it change your calculus in terms of how you view the markets?
I don't think it changes your base case that much. I think to all your point, the benefit from him is he's viewed as a little more mainstream, a little kind of right down the middle. If you look at the Trump appointments to date, it was when the markets didn't like it. It was when things like the attorney general nomination were kind of a little bit outside of the center lane. So, we'll see what the ultimate, policy ends up being. But I think he's viewed as A, market friendly, B, really understands macroeconomics, and C, probably a little less aggressive on tariffs than kind of the worst outcome. So, markets like it, so I'm a markets guy. I guess it's the right choice.
What are we seeing here in terms of the markets grind higher? I mean, is this a pull forward of seasonality? Is this going to continue through the next year? I mean, we have the highest S&P 500 target is 7,000 for next year. It's not bad.
It's a big number. Look, is it a pull forward of seasonality? Maybe a bit. I think markets want to go higher here. I mean, if you think of, Fed's in cutting mode, jobs data holding in fairly well. Earnings season was okay, not bad, not good. I think, big picture there, markets do want to rally into year end. And I think if you take the hurdles or roadblocks out of the way, they're going to do that. And I think that's kind of what you saw last week and then into early this week. It's going to be also a pretty low liquidity week as well. So probably momentum rules the day, at least tactically.
So, Stuart, the first term that we had with Trump back in 2016, everyone thought energy was going to run. Energy sold off, so it was counterintuitive. Are there any sectors that are counterintuitive right now that you think are the dark horse to actually run?
Well, look, I think, energy and healthcare, I think coming into the election were the two that we would have said are kind of more of a mixed bag. I think a lot of folks thought, Democrats are good for healthcare, Trump is good for energy. But to your point, if you want to drill, you're pushing oil prices down, and that can be bad for the diversified. So I think you have to go below the sector level in energy. I think the same is probably true in healthcare as well. I mean, people are really struggling with the healthcare sector right now. How do you deal with the RFK nomination? Vis-a-vis also potentially an M&A cycle, which kind of hits biotech and mid-cap. So I think those are the two sectors right now where there's the most at play. The cleanest sector has been banks, clearly. We'll just have to go beyond that. I think if there's one sector maybe people are a little bit concerned about from a tariff perspective, it'd be more your retailers and those folks. So if you got maybe less negative tariff headlines, maybe you get a little bit of a bid in there. We'll see. I mean, our analysts did a lot of surveying around the holiday season. They think it could be a pretty strong holiday season to begin with. So, again, healthcare and energy to me are the two biggest wild cards from a sector perspective.
In terms of those wild cards, though, I mean, does it offer the most reward to the upside at least? I mean, it has perhaps the greatest risks, but are the rewards seem to be there?
Yeah, I mean, healthcare has been such a challenge, for the last 12 to 18 months. But that is clearly, from a sector perspective, where the most negative views are right now. So, I think if you were to get, a little bit of M&A in the space, you can kind of add a little bit of a valuation premium into the SMID part of healthcare. And perhaps if the outcomes at the top level are a little bit, better than expected, that is an area that should work. But look, we were wrong on healthcare earlier this year when you had mid-teens earnings growth and a nice Ozempic kind of theme going on as well. But I think that's an area where expectations are low and you could get the most sentiment relief based on policy.
So, Stuart, going back to tariffs for a minute, what would be, is 30% sort of an acceptable amount? Where do we hope to get to?
Acceptable amount's a tough one. I think probably the base case right now, if you asked an economist, they're probably at least putting a 10% tariff across the board as like a baseline or a baseline scenario. So, look, anything above that, I guess, is probably going to be a little bit incrementally negative for the growth forecast. It's tough, especially for Fed watchers right now. The Fed has been very explicit. We're not going to include those in our forecast unless they're announced and implemented. That might not happen until mid next year. The Fed's going to release a new SEP in December, which is not going to reflect any tariff outlook. So I think it adds a lot of policy uncertainty. But look, I think 10% is probably the baseline for most people. Above that, beyond that, probably be right incrementally negative. The question is, what do they do with China? I've heard numbers in the 50 to 60% range there. So look, I think 10% baseline, anything above that, probably incrementally negative.